Hey, what's up, friends? It's your realtor, Peter Scott with Scott Realty, and search sacramentohomes.com. I'm here with our quick December 2022 real estate market update, and I'm going to give us a quick overview of where we are today in the market and some predictions for what we think we might expect next year. So to jump right into it, the headline remains that the prices in Sacramento have been declining. We are down 12% from the spring of this year. 12% in 6, 7, 8 months. That's a lot. So that's the big headline. And now the other big headline is that we are actually down 2% from where we were last year. And the reason that's major is because that hasn't happened in the last decade or more. Since the real estate market hit bottom in 2012-ish, we've been going up, and dramatically up over the last 2 or 3 years with the pandemic. So we have not seen a price decline year over year until recently. Sales are down about 40% as well. Obviously, that is tied to why prices are declining. And the sales are down, the prices are down because the interest rates have risen. We had such low interest rates for so long. People got so used to that. Now that prices or interest rates are around 6%, it's taking people are taking a step back. And I was kind of thinking about that today, how 2021 has kind of been 2022 has kind of been a settling year. There's been so much uncertainty with all this inflation and other things going on, the war in Ukraine. It's been kind of people have pulled back, and they kind of want to see where's this all going to settle out. And I think we're kind of coming through some of that, getting a little more confidence where we are today, but we'll see how that all shakes out. Median home price right now in Sacramento is about $505,000. I would not be surprised if we saw that dip under $500,000 in the next month or 2 or 3. At the regional median home price, that's Sacramento, Placer, Yolo, El Dorado County, is about $550,000. So other counties are a little more expensive, some are a little less expensive. It just depends where you're at. Inventory's up, obviously, about 250% from last year. So that has us actually sitting around 2.5 months of inventory. So we were anemic in inventory during the pandemic. So last year, this time, we were around 2 weeks, 3 weeks inventory. That's why that's such a big number, 250%. But actually, 2.5 months in inventory is still considered a seller's market, which is kind of interesting. Prices are declining, but it's a seller's market. Such a weird time we live in right now. So a normal inventory would be in Sacramento would be 3 months, 4 months, 5 months, something like that. So we're the more houses on the market because they're taking longer to sell. So that is kind of what's going on there. So let me talk to you about where we think the prices are, where the market may be going next year. Prices will probably continue to decline. Nobody knows when we're going to hit bottom, but probably 2023 we'll see prices continue to decline. Maybe another 6 months, maybe another 3 months, maybe all next year. We just don't know. Real estate markets go in cycles. Right now we are declining, and at some point we'll hit bottom and we'll plateau for a while, and then it'll probably tick back up again. We don't know exactly when that will happen. Interest rates are a big outlier right now. If interest rates spike to 7, 8, 9, 10%, of course I would just keep pushing prices down because of affordability. But if interest rates go back down to, let's say, 5%, 4%, well then that may help us hit bottom sooner. People ask me a lot about foreclosures, short sales. Are we going to see a whole bunch of foreclosures? I had someone who was waiting. We're waiting for all the foreclosures. Probably not going to happen. We will certainly see foreclosures. We are seeing them already. It's very few, not many at all. And that's for a few reasons. One, California is not a foreclosure-friendly state. The government doesn't like foreclosures. Obviously, no one really likes foreclosures, but they made so many laws in the last 10 years about foreclosures. It's really hampered things. It takes about a year to happen. Two, most of the loans that have been made in the last 10 years have been very solid loans too. Back in the mortgage bust back then, they were giving loans to anybody who could fog a mirror. So that's not really happening anymore. So most people have strong, income and decent credit, and so they're a lot stronger loans. And the other thing too is that banks are to be more amiable to doing loan modifications. They'd much rather work with you on the payment, do a modification than foreclose on the house. It's very expensive to foreclose, especially in California. So we will see them certainly. There's actually some in the market now. It's about 1% of the market, but you probably won't see a ton of foreclosures. Getting back to the market where it is. the way I kind of see things in, in our market, we have two kind of opposing levers going on right now, in California. One in Sacramento. One is overall affordability. Only about 25-30% of people in Sacramento can actually afford to buy a house right now with the median home price. The other is just inventory, because California has a housing crisis. It's been going on for so long. We just don't have enough homes for everybody. So those two levers are kind of like moving against each other, and they have to even out at some point. When the inventory was really low, the prices are going up and up and up. So as we get more inventory, the price is coming down. At some point, they will even themselves out. So where that ends up, we don't know exactly. So it's sum that up, we'll probably see price decline for a little while more, and we probably won't see a whole bunch of foreclosures. But if you're thinking about buying a house right now, it's still a great time, especially considering where we were the last couple of years. You have so much more power as a buyer now. If you're looking to buy a house, you have so much more to pick from. Interest rates are a bit higher than they were, but prices are lower too. Here's a quick story for you. I had some clients recently. They got their house $25,000 under the asking price. Then we were able to negotiate $8,000 credit for repairs. That's just huge. You would not have seen any of that in the last 5-10 years even. So that's a really great opportunity. And if you're looking to sell your house, you're still going to get a good price for that house, comparatively, because prices are still way up from what they were a few years ago. It'll just take a bit longer to sell that house. So you just have to be patient. Instead of taking 2 weeks or even a week, a few years ago, it might take 2 months or 3 months or maybe more. So, our days on market are kind of ticking up right now. So still a great time to get out there. And if you're looking to buy a house or selling a house, the answer is it a good time? The answer is, if it's a good time for you, it's a good time. You can't time the market, so don't try. If you're ready to move and make that jump, then go for it. Let me know if you have any questions about this. I want to be your real estate resource. Y'all have a happy and very safe New Year. Take care.